Hi, this is Ian Coleman from Signal Centre, and this is this week's video analysis for the dollar index and FX majors going into the week 29th of April 2019. I'm going to start off with the dollar index, different time frames highlighting what we're seeing going into this week, and then breaking down the FX majors. We've got to express some caution. We're still looking for a turn in the dollar, but we're not seeing it yet, basically. Not clear confirmation that the dollar index has flipped to the downside. What we have got on the weekly chart is a bearish Elliott wave count, 5 wave counts lower. That would dictate that the whole move to the upside is corrective. We are in an ending wedge pattern. We are close to the 61.8% Fibonacci level, which comes in at 97.86. However, trendline resistance is not located until 98.93. So the scope still for a move to the upside in the dollar index. The daily chart is showing some signs of stalling. We've got a bearish outside day posted on Friday. This is often an indication that the upward move has come to an end and the bias has flipped to the downside. Possible ending wedge pattern. We need to see a break of 97.27 for a move to the downside. 95, around about 95.75 is the measured move target for a break of this wedge. We'll probably then see another corrective move higher to possibly form an ending head and shoulders pattern. So in other words, this would be the head, left shoulder, neckline, and then move higher to form the right shoulder. So at the moment, pretty mixed signals. For us, we're still looking at buying into dollar dips at the moment, only because we haven't really got a clear indication that this rally is coming to an end, but with caution. So euro dollar, let's go to this time frame first. This is the weekly chart. Here we've seen price sort of fluctuate around the 61.8% Fibonacci level, which is located at 111.80. We've got a previous swing low now at 111.76. That then becomes resistance. So it was support. It now becomes resistance to the upside. Warning signs here on the daily chart. Again, looks like a large wedge formation. Could even be an inside wedge formation. Doji style candle posted on Friday. We've seen some upward pressure. We've got to see a break of this trend of lower highs, 113.22, or at least a clear break of 113.22 to take us up to this level here, which is located at 118.17 and is the measured move target. There's still scope if this doji style, Friday's doji style candle breaks for a move lower towards the base of this outside wedge, which is at 110.50. At the moment, intraday chart, again another warning sign. Looks like an expanding wedge formation that has a bias to break to the upside. However, we've got the trend line resistance now coming in. Let's just move this down. In fact, we'll get rid of this. Got trend line resistance coming in around about 112.02. We've got a 161.8% Fibonacci level at 112.13. And we've got our bespoke resistance at 112, the figure. So at the moment, even though signals are pretty weak, we're looking at intraday to sell into rallies in euro dollar. If we get a clear break of this wedge formation, then the immediate bias is up here at 113.22. But I think we're pretty well protected intraday around that level. Sterling dollar, again, sort of warning signs. The medium or long-term bias is still to the upside as long as we get a monthly close above 127.40, which seems highly likely today unless we get some very bad news from the UK. Then the medium-term or long-term bias remains bullish. A break of 136, the figure. The measured move target is up here around about 171.90. If we go to the daily chart, here we saw a triangle formation break to the downside. However, the move lower has lacked any strong conviction, bearish conviction. The measured move target was down here around about 126, the figure, which is also the 78.6% Fibonacci pullback. However, similar to euro dollar now, looks to be forming, this dotted red line looks to be forming an ending wedge pattern, a break of 130.23, and the measured move targets up here at 133.82. However, again, intraday, this move higher looks pretty choppy at the moment. We've got trendline resistance located at 130.17, and we've got bespoke resistance located at 130.004. So again, at the moment, we're still looking at selling into rallies, but with caution. We've also got this previous swing high located from the 23rd of April, and that's coming in at 130.19. Dollar Swiss, we broke this wedge formation to the upside. Don't see that very often. 101.75 was the resistance level. We failed to close back inside that resistance level, so it was resistance, it now becomes support. If we go to the daily chart, again we've got some warning signs. Got a bearish outside day posted on Friday after two indecisive inside days, so not the strongest signals. And if we go to the intraday chart, we've got a 161.8% Fibonacci level located at 101.52, and we've got bespoke support located at 101.50. So again, even though the immediate bias might be to the downside, I think we've got decent protection to the downside around about that 101.50 level, at least for today. Dollar yen, let's look at the weekly chart first. We've got a bearish outside week, again often an indication that the upside pressure or upside rally is coming to an end. 112.80 was trendline resistance. If we go to the daily chart, again a few warning signs here. Pretty mixed volatile trading, probably for about the last 10 days. 112.80 is that aforementioned trend of lower highs. This, if you're an Elliott wave enthusiast, you could annotate that as a fifth wave now, just because it's broken the high of this previous swing high, which was on the 5th of March, located at 112.14. However, the move lower doesn't look too aggressive. The intraday chart, the 4-hour chart, we've got bespoke support located at 112, the figure. We have seen a bounce from this 38.2% Fibonacci level, and then to the downside we've also got further support, which is the 50% pullback level at 111.05. So again, at least at the beginning of this week, we're looking at buying into dips. Like I said, 111.20 is bespoke support today. Dollar CAD, let's go to this time frame. This is the daily time frame. Here we've seen a flag formation breakout to the upside. We've got reverse trendline support at 134.29. The measured move target for this flag formation is at 136, the figure. Something quite interesting to note here, saw a sharp sell-off in US oil or crude on Friday. That would normally dictate that that we get a weakening in Canadian dollar. We've not really seen that. We've actually seen Canadian dollar strengthen on this time frame. So we've seen a weakening in US dollar and a strengthening in Canadian dollar. But we are still posting inside days. If we break through that trendline support, or if that trendline support holds, then we'll probably post another inside day on dollar CAD. So the immediate bias is still to the upside. If we go to this time frame, the 261.8% Fibonacci level is located at 136.02, and that's extremely close to that flag or pennant formation target at 136, the figure. To the downside, we've got reverse trendline support located at 134.20. And we've also got this previous swing high. Now the swing high is at 133.99. We've got bespoke support located at 134, the figure. So we might see limited selling in dollar CAD today. Prime support is probably at 134.20, but we're actually using our bespoke support, which is at 134, the figure, to offer us a better risk reward trade setup for dollar CAD today. Aussie dollar broke this channel formation to the downside. We have seen a doji style candle and some follow through selling. Reverse trendline resistance comes in at 71.04. If we go to this time frame, here we can see levels close to the 261.8% Fibonacci at 70.17, finding some buying interest. It's been pretty impulsive, this move to the upside. However, commodity currencies have a tendency to run to 423.6% extension, which is down here, around about 69 the figure. And this initial move was quite impulsive. We also had a previous swing high here, so we can see why there's been some profit taking, but that's what we believe it is at the moment, just purely profit taking. We've got bespoke resistance located today at 70.87. We've got trendline resistance located at 71.07. And like I said, swing low, probably the initial target, and then 69 the figure, a possible extension target for this week. Euro sterling, and this is probably still my favourite call or trade idea, even though we've had 40 odd days of little net movement. That's highlighted by this monthly chart, but we've broken that wedge formation to the downside. We've got reverse trendline resistance coming in at 88.57. Measured move target is 83.13, which could also be an ABCD formation pullback. If we go to the weekly chart, again an ABCD formation located down here. There's also some bespoke support located at 84.65. So I think even the move to the downside will stall, but at the moment the bias is still negative. If we look to this time frame, levels above 86.70 continue to attract sellers. That's where our bespoke resistance is today. To the downside, we've got trendline support at 85.07, and then that aforementioned bespoke support at 84, around about 84.70, 75. The RSI is trading close to 50 level, again highlighting that we're non-trending, but I think rallies are still going to attract that selling interest. Euro sterling, not euro sterling, just on euro sterling, I do apologise. Euro yen, mixed trading. This is the daily chart for the last 39 days. Looks to be in a channel formation. Prime target level or a reversal of this bearish bias is located at 123.17. That's the base of this channel formation and also a 50% Fibonacci level. If we go to a shorter time frame, levels close to the previous swing low have found some profit taking. Pretty mixed volatile move to the upside. The move to the downside is impulsive. That would indicate that it is the main trend at the moment. Bespoke resistance today is located at 125.22. We've got our stop located at 125.67, which is just above the previous swing low. So it was resistance, it now becomes, it was support, it now becomes resistance, targeting the 261.8% Fibonacci level today, and then possibly down towards that 123.17 confluence area to the downside. Okay, I hope you found that informative. I hope you have a great trading week, and we'll speak to you again soon. Many thanks.